So before we start the risk warning, spread betting and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78% of retail investor accounts lose money when trading these products with this provider. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Intertrader is a trading name of Intertrader Limited, which is owned and controlled by GVC Holdings plc. Intertrader Limited is authorised and regulated by the Gibraltar Financial Services Commission and registered with the Financial Conduct Authority in the UK. Reference 597312, registered address, Suite 6, Atlantic Suite, Europort Avenue, Gibraltar. Okay, so the markets. Now, the first thing you need to do when you're trading is have the right kind of idea about your technical analysis and, what the markets are trying to achieve. And the first thing is, if you can trade it, if you understand why it's moving or not. So the first thing I always look at is this screen. Hasn't changed in decades. Not because I'm lazy, because I have to go back to that consistency. I have to go back to understand the markets, where they are in relativity to other markets, because this is the way big boys trade. Big boys trade in baskets. And when we're talking about the currency markets, they're traded in baskets. They're traded, not just one individual currency. People trading multiple currencies. And hedging. You have to remember there's a lot of money to be made in the trading industry, the financial industry in general, just by creating volume. So you can hedge your product. Yeah, you're doubly trading. You're making twice the amount of money just on the spins alone. So this is how the real world works. So what I'm trying to figure out is basically what's the correlation between the safe haven of gold, the more risky assets like your DAX, your tech, your FTSE and the S&P, and then what's generally happening in the currencies. The main currency for me is the dollar yen. That shows me what the world's thinking about the strength of the dollar. Dollar's still the number one currency. Old Trump, he wants to kind of bring that down because he wants to make the US the engine of the world again, the manufacturing kind of hub of the world. Ain't gonna happen. Ain't gonna happen anytime soon. It just doesn't compute. Unfortunately, old Trump, he hasn't got a real clue about real wages and the cost of manufacturing and the fact that Americans aren't competitive no matter what price the dollar is. They still have human rights and the fact of the matter is this idea you can take a product like the iPhone and suddenly make it in America. Yeah, you can 100%. It just means the average iPhone is going to cost you probably about $5,000, and that's just not going to work. So the dollar is the kind of the bottom right. That's really the kind of trigger for what's going to happen in the euro potentially, and the pound. The pound, obviously, the euro and the pound are heavily affected by Brexit. Again, a subject that unfortunately we can't get away from. My own personal kind of thoughts on Brexit. Still think a deal will happen. I think the world global economy is too fragile for a little spat over the Irish backstop, if I'm being honest. And the manufacturing kind of data out of the global economy, especially Germany, is weak. And why is it weak? Because we're a bloated, fat planet that has loads of stuff, and we just don't. We're not spreading the love around, the money around for enough people to buy things. So yeah, a Mercedes, BMW, Porsche struggling to sell cars. Yeah, they probably are because everyone that's got one doesn't need another one, and we're not creating enough wealth for the people that can aspire to have more because we pushed that money up to the 1%. I was down in Auckland just on Monday test driving the new 911S. I put a little bit picture on Twitter, and to be honest, it left me a bit cold. It was very much like an Aston. Well, the Aston, some of the cars I've had in the past, just completely too fast, over-engineered, and had no soul. Are you going to drop $250,000 on that? Probably not. But there we go. This is the thing. We've created a lot of wealth all over the world in houses, in the stock market, and they've been at the top for a while. So people have gone out, they've bought the toys, and they bought the other things and kept the world kind of ticking. But now it's struggling. It's struggling to find a new market. All we've got is money sat there in bank accounts, in treasuries, in bonds, as I say, in these family offices. Not just millions, trillions of dollars tied up, just trying to beat inflation or just trying to kind of find somewhere safe to put this huge amount of money. So again, that's all with the top 10% of the world. Everybody else just fighting for the crumbs. And that kind of point is very important when you see the drops in the stock market, because that is really huge, kind of institutional grade, investors pulling out of the market and cashing that in. So it's got to go somewhere, and that again will probably, will explain the relationship between gold and stocks. If you look at the S&P, okay, we've dropped a fair bit on the short term, but on the weeklies, still business as usual. Again, we've had that big kind of sell-off, and we've got back into the trend. And I've said it once, I've said it a million times. Rejection to close lower, higher, rejection to close lower, higher, rejection to close higher. We all sell off more than usual, just to break through, to get all the kind of weak shorts out of the market. Bang, buy it all back. The 1% and Trump and Putin all buying it back there. And then selling the markets on to make new highs. So again, we're just in the normal phase of just a standard, correction, just a bit of profit taking. So really, the fact that the markets have dropped over the last couple of days has absolutely nothing to do with Trump being impeached or not being impeached. Markets don't care. The trade wars, well, they've been going on for quite some time now. They're the best trade deal they're ever going to be, or they're the worst. Again, the spin of Trump. Brexit, closer to a definitive answer. We've given an idea to the EU of what we want. The EU have gone, it's not the best. But, they haven't said yes, they haven't said no yet. So, again, it's all status quo. So the fact that the markets are sort of aggressive in a couple of days means absolutely zilch, zero. So I still see, 3086. That's going to be the high in the S&P for me. I don't understand why it wouldn't go up from this point. Again, unless there was war with Iran or something else. But Trump's a bit busy, isn't he? He's been put back in his box a little bit because he's shouted his mouth off a little bit too much, and the world's starting to kind of finally think, well, do we want 6 more years of this, or do we want to kind of take the money that we've made in the stock market and the economy, get him out, get it under control before the whole thing busts and we end up with 2 or 3 wars in the stock market in the bin. So really, I think bit of self-preservation mode is coming through America at the minute. So I don't think Trump wants a second term, if I'm being honest. I think he's just a very, very, very arrogant man that thinks he can do whatever he wants. And unfortunately, trying to run a business like, a country like a business isn't the way to go. And it's starting to kind of, the cracks are, certainly starting to show now. And it's this whole idea that, things are recorded and put in special places just for kind of, like the most secret of secrets. Just goes to show that he's trying, and he's not trying, he's been in business. In business, if you're unethical, you cut corners, you do shady deals, and he's just brought that mentality to the White House. Anyone that's not fallen in line has been fired, and you can go through these things however you want. I'm not, I don't hate Trump, but why would I hate him? He's not interesting enough. He's not important enough in my life to really care about. From an economic standpoint, you're just trying to look at what he's trying to achieve, send the stock markets up. Why? Because he can make money from that. And this will all come out in the future. I guarantee he's got offshore funds all set up with Ivanka and his kids and probably some shady people like Putin. So every time he sends a tweet, he can make some money. So that's what Donald wants. He wants the money. But he also wants the time. He wants to go and play golf, build some more towers, build some hotels, and do what he does. So they get to a point where he has an out. It'll be a health reason. It'll be this impeachment. There'll be a deal that he's not impeached, but he steps down. There'll be something because he doesn't want a second term, because he's made enough money now from doing what he's done, and he wants his time back because he's an old man. He wants to go and play golf. He doesn't want to have the responsibility of running the country and people telling him what to do. So that'll be the ultimate reason why Trump doesn't have a second term, because he doesn't want to, right? That is the main thing. So good or bad for the stock market, who will know? If we get this, Pelosi in and she starts breaking up the big companies, well, yes, the markets will go down, but the same people that have shares in that company will still then buy them back up. So I don't think we're likely to see a crash like we saw in the 80s, a total market meltdown. I just don't think that stuff can happen in these conditions, because the rich, the 1%, have too much to lose. And although they can let it go down as low as they want and buy it back up, you don't want to create that instability that'll have a lasting kind of knock-on effect. And that's why the government for the last 10 years have put all the money in quantitative easing, kept rates ultra low, because they don't want a hard reset. It's just too hard to kind of bring the economy back up, and it takes too long. So that's why they're doing all these things to keep the show on the road. It doesn't matter that, you know, it kind of only really helps one, you know, or two sections of the population. It doesn't matter that all the young, you know, people get left behind. We don't care about them. You know, they can have the money in 10 years when the boomers are dead. What they care about is not letting the wheels fall off and keeping the show on the road. That's why every time we've seen these dips in the stock market and the fear could come in, it's been rescued by the government and by the people that have all the wealth, this mythical but real 1%. So as I say, the relationship between the stock markets and gold are an interesting one, because stock markets have had a tiny bit of a dip, as I've shown you, but are actually pretty high in comparison. So why is gold, you know, back at, you know, the 1500 level? You know, we should be seeing gold tanked. It should be below $1,000. But this is the other thing. There is so much money in the world that it has to go somewhere. There's so much money in kind of, you know, in China, you know, in India, and again, it's all controlled by that top tier of the population. So you want to kind of diversify and spread your risk. Well, of course, you put it in gold, because gold's a safe haven. But we're not working in traditional ways anymore. If gold's high, then that should be a precursor that there's fear and dread and worry in the markets about whatever, you know, recession, whatever we want to mask it as, whatever the thing that's going to cause things to be not as they were. You know, recession is just, you know, two periods of you know, kind of diminishing growth. It's just a made up thing. Economics and things like GDP and inflation and all these kind of things don't mean anything anymore. They don't exist. We need to find new measures and ways of looking at the economy and measuring how well it's doing, because the GDP doesn't necessarily mean a country is doing well. It's just a measure of the total goods it produces. It doesn't take into account everything else. And this is why it's so difficult with economic data right now, because of the 10 years of ultra low interest rates and printing money in QE. We don't really know what inflation should be anymore. We know what it used to be in the olden world, and we know the target, you know, around 2% used to work, but it doesn't work anymore because the conditions aren't the same. So again, gold is just another literal commodity, something tangible, physical, that again, the Goldman Sachs of the world, the central banks could prop up, pump up, and just make things valuable and, you know, kind of attractive for investors. So if you're sat there like the guys I know that have like 4 or 5 billion just on tap, you know, there's only so many treasuries you want to buy. You know, the guys I know are buying treasuries to stay off the, you know, the list of, you know, embargoes from the US. You know, that was just a kind of a peacekeeping deal. So you're still going to put your other billions somewhere else, and there's only so much you want to be exposed in the stock market. So you stick a ton of money in gold, because, you know, they keep telling us, you know, gold, oh, it's a protection against inflation, it's a safe investment. There's no shortage of physical gold. You know, we're talking there's over $1 trillion on the seabed that we can't get to yet. What do you think old Muskie and, you know, Branson are doing, you know, sending rockets up into there? It's not all about, you know, getting to Mars and getting to, you know, getting satellites put out there. There's meteoroids, there's asteroids out there that have more gold floating around them and precious metals than there's ever been on the Earth. So again, it's just another, you know, frontier, you know, space, the final frontier, going out there trying to mine this stuff. So if there's no physical shortage of gold, why is it going up? Because it's a man-made thing. Think back to Warren Buffett. You know, he said he's never surprised by man's ability to create wealth from nothing. And that's what it is, just creating wealth from nothing. So gold's going up purely because maybe, and I could be wrong with all this stuff. I mean, after all, I've only do this for 20 years. What do I know? But it could be that, you know, this is the precursor to a dramatic drop in the stocks, and this is the kind of, you know, warning sign that when the gap closes, maybe we get back above previous highs and gold breaks 2,000. You know, that the stock markets are done. But I just don't see that correlation. I think if that was going to happen, you know, we'd have seen it by now. So the kind of long and short answer is to what do you do with gold? Whatever you want. You know, the money's not made buying it here and holding it here. It is for a small section of the population. But then we're talking about investing. We're not talking about trading. Okay, trading is about being right at the right time. Trading is about being market neutral and being able to sell and buy value. So of all the things I've told you, you know, about Fibonacci, about total traders, about the Elliott wave, about everything I've ever told you, if I don't tell you nothing else for the next however many times I'm going to do these webinars, yeah, this is the secret to trading. If it goes up, if it goes down, doesn't matter. Yeah, you just have to be able to buy and sell value compared to the range. Now, if I'd have told someone had told me that on day one of trading, I'd have made a lot of money a lot quicker. Because again, like most people, I was trying to buy the low and sell the high because that's what people tell you to do. That's the old world. The old world's gone. Okay, buying the low and selling the high, yeah, it's a perfect idea. But in reality, markets don't work that way. When you're looking at your hourly charts, where you're going to get the majority of your signals, yeah, what you're going to see is, yeah, you can buy the market, but then the market comes down. So what you're actually doing, you have the opportunity to buy the market. You leave money on the table here. The market comes down, and you take less profit. I guarantee that's probably a 50% fib. Let's do it just for old time's sake. Strong directional move. 8% of the time retraces to 50%. Well, there's your 50%. So it works. So you've given away 50% of your money to then again think about it going back up again. Probably get out. Yeah, don't buy it again, and the market goes up. So this is the whole point. You can buy the market, then you can sell the market. Then you can buy the market and you can sell the market. Then you can buy the market and you can sell the market. You're going to make a lot more money approaching the markets that way by not leaving money on the table and trying to buy here and sell here. And you can look at that and say, yeah, all right, Steve, well, that's easy. Of course, we'd all love to buy here, sell here, buy here, sell here. Yeah, we would. But then this is the whole point. I go back to how you make money from your technicals. You have your lines here. Yeah, you have your Fibonacci's, you have your pivot points. So when you see these overextended moves, you buy it anywhere you want. Yeah, it doesn't matter. You're not trying to get from here to here and make that entire move. You just look for where it's going to go, back to your fibs, and you just buy it. When it then makes that high, yeah, and then kind of closes here, you've got a signal here that a big, strong move, yeah, has closed out and stopped. So you necessarily don't have to sell it because, as I say, being market neutral means you can buy and sell. If you think, you know what, I think gold is going to go back up again, but just let it go down. You let it go back down to a logical point that's been before that, which is pretty much the 50%, and a big, strong 423 spot 6, Fibonacci retracement, then it goes up again. And you can just count the candles, count the hours as they close if you want. And every time it's green, you keep long. And when it goes red, you get out. And that's how you make the money in that particular move, just by counting the green candles. But again, you can look for another point of interest, another point of, the Fibonacci, say, the 161 or the 50% you get out on. You have to have some targets to be in and be out. And this is the whole thing. It's about adapting styles to the market. And it's being neutral and being able to buy and sell, not having a bias. Or if you do have a bias, just do that. As I've told you, I only ever buy lows in the dollar. I only ever buy lows in the pound. I only ever sell highs in the euro, and I buy lows in the stocks. So I don't, hold my own mantra of being market neutral and buying and selling. If I hear something clear cut or I see something clear cut, that's what I'll do. But I'm not greedy, so I don't have to buy and I don't have to sell. I can just have one slight bias of a product, which kind of allows me just to do one certain type of trade. So in gold, for instance, I'd generally be selling highs, based upon previous analysis, and that's not been that bad. Again, you can still get these big selling opportunities in gold, even though it is going up. And that's just my personal opinion. I prefer to sell into these big spikes because I know there's going to be some profit taking, and that's the way I trade it. You might be the opposite. You might buy it. So it doesn't make any difference to me what you think or what you do. And I'm not telling you to replicate, what I do. What I'm saying is after 20 years of finding every way not to trade, I just came to the conclusion that, yes, I like to sell rallies in gold. So I don't buy it, even though that would be maybe, the best trade to do. I wait for it to get to a high point and I sell it. And it might be a lower grinding move. It might not be exciting. It might take a bit longer. I might make a bit less, but it doesn't matter because what I do is I make money. And then I stop doing that. And then I wait for the next opportunity or I trade something else. So this idea that the markets are moving and you jump in and it's like, oh, that's going up, so I'll buy some of that. You can do it that way, but you have to be, quick. Because if you're late to the party, you'll be buying a market that's going up and dips back down and you'll get your money taken off you. Now, the difference in the way I trade and the way most people trade is, I trade big size. So if I'm selling here, market goes down, come back up, I'm selling. So I might be selling 2, 3, 4, 500, £1,000 a point, averaged into these positions here. So when it grinds down to here, yeah, I've got the biggest payday on earth, but it's big enough. Yeah, so I don't have to buy £1 here and sell it out here to make some half decent money. I can make 10 grand just out of this move here by selling it into the size. And that's something else, that I come back to. The only people that I've known that have made big money out of trading have traded big size. Yeah, and that we're talking about 1,000 clips in the Euro stocks, 1,000 clips in the bond bubble shats, big boy proper markets. But you can still clip £500 a point in gold. That's enough. That's enough to get any reasonably sane person excited about trading. You can make enough money by doing that, but then you have to have the account to be able to do that. And people don't like some of the webinars I do. People don't like the way I speak because I say you have to have a decent amount of money in this to be able to make money trading. People don't like hearing that. They think they can put £1,000 in an account and turn that grand into $1 million just by trading Bitcoin and buy some green Lamborghini. It doesn't work. That just is nonsense. It just does never work. You have to look at trading like a business. And most businesses fail because they're undercapitalized. Most businesses fail because people are just trying too hard. They're missing the way of making money. So trading's all about not leaving money on the table, banking money all the time, and then getting out when you're wrong. Now, it sounds simple, doesn't it? But how many people just forget the basics of trading? How many times have you seen the top in the stock market and sold it and then thought, that has to be the top. It's got to go down. It can't go any higher than this. I'm going to hold it. Then you hold it for a day, you hold it for a week, hold it for a month. All of a sudden, you've done in 50% of your account. I've seen that a number of times. And as I say, I've seen well over 1 million in accounts, kind of drawn down from accounts across the board over the last 6 months by people alone just selling the stock market. Now, again, the people I work with generally will only do that once, and then they learn from that bitter mistake and that loss, and they go back to the idea of just trading larger size for shorter periods of time, getting a couple of bites of any big move, taking that money off the table, and therefore keeping that risk low. So, as I say, looking through even the hours and going down to the 15 minutes, there's every opportunity just by looking at your basic fibs, the 50%, your overexpansion points. Yep, you can both buy and sell, and there's plenty of money to be had. The whole point about looking at different markets is if there's a candle this big, then you're going to make some money. Not necessarily at that candle, but after the aftermath. So you can just look through your charts and say, right, whatever's got a big candle, then I can make some money from this. You don't have to be a genius. You don't have to be over technically qualified. Look, big candle. So what did it not do? It didn't close towards the low. So what happens when stocks don't close below the low, Steve? Oh, that's right, they go up. So 3 candles there. You've got opportunities on the NASDAQ, yeah, on the hourlies or the 15-minute, yeah. Okay, it goes down, rejects. So you've got 1 consolidation, 2, 3 consolidation, 4, 5 opportunities after seeing that big rejection, that big candle, to really get involved and just buy some low stock market. You can do it, for 10 pips, 15 pips. Oh, good. It's all money. Yeah, you don't have to be a genius and buy it here and sell it here, like I said, because you're going to buy, 200 NASDAQ here and then hold it here. No, because you're going, oh, is the NASDAQ going to crash? Is it finished? Is that it? Is that the end? By the time you've hesitated and dithered, the market's back up here. Oh, well, I don't know. Is that confirmation? Shall I let that candle close? Oh, it's up here. Oh, what do I do? Oh, I'll buy it. Oh, it's going down. Oh, I got it wrong. Oh, it's too hard trading. Yeah, you need to have that kind of mindset. But you're in. You're out. And you get that by doing £10 a point. It doesn't matter. Make 100 quid, bang. Lose 100 quid, bang. Okay, I get that. Right, let's try that with £20 a point. Make 200 quid. Oh, I like that. I'm not going to jump back in. Oh, make another 200 quid. Oh, lose a bit of money. No. Want to preserve that capital. Right. Before you know it, you've been trading for a couple of hours. You made 2 or 3 grand. Bang, you're on £50 a point. You're on £100 a point. Then the reality becomes self-fulfilling. You make money just by the market moving. You're not waiting for this mythical signal, of all the stars to align. Your Fibonacci's, your pivot points, whatever else, your support and resistance. You just let the market move, and as it moves, you make a judgment call. It's going to continue that move, or it's going to reverse that move. Remember, you think about all the things like market, profile where you've got that bell curve. You know, things extend up, they expand down, but they generally come back. So you're just looking for lows and highs, the movement in the market, and try and get back. And your fibs, again, your fibs will always hold you true, yeah, based upon the overall moves or those short extension moves. So again, you know, I mean, obviously it retraces, but you know, from the high to the low of that red candle there, 8% of the time a strong directional move. Yeah, we know it was 80%, but also an overextended move. So overextended move here. Where's your 50% here? But that's also, excuse me, you know, it gets back and comes back down. It's a jumping point for the next Fibonacci to go back up. So not only can you buy it, you know, anywhere inside the close and get back to the 50%, you can then let it go up a bit, down a bit, and then buy it at the low, and it goes up and then doesn't look back from that 50%. Well, where did you get to next? Yeah, you're 100%. Oh, well, is that working for you? The 161.8, the expansion point? Oh, yeah, that's working. So what's it going to look like now? Maybe this? Maybe that. You know, it's like a tool for the future. Wouldn't it be nice to know what the market is going to do in the future? Well, it's kind of going to do back to the 50% or that. So what do you want? Yeah, I can't make it any clearer, and that's based upon just that one candle, identifying that as a breakout candle. Now, I go through that a lot in the book. You know, the kind of Fibonacci principles. So if you've never read the book, just go on Amazon, The Rough Guide to Trading, and get yourself the book. It's 16 quid. Yeah, I spent a lot of time, and when you have done a lot of webinars as I have, writing stuff down is very hard, incredibly hard, in fact. So the way I've wrote it and the way you have to explain it in a book is very different. So the reason I've always done webinars live and even on, you know, mundane topics like Elliott Wave, etc., is because every time, you know, I'm saying it, I might add something a little different, you know, because you're always thinking about other examples or you're thinking about other kind of situations where it's worked and hasn't worked. But this is the whole point. I'll do the webinars and the live and I'll show you things working in real time. But then when you have that kind of downtime and you wanted to just think about something, how something, you know, actually is put together and how the rules of it are put together and how I've used it and written it, it just can give you a different perspective. So, you know, it's not a particularly, you know, difficult book to read. So it's another way of learning a strategy or learning a kind of technical implement that has worked for me and worked for other people and, you know, how I use it. So it is good to look. But I mean, just that one simple being identify, you know, a trigger point in the markets. You know, again, we're only on the 50-minute candles. So, you know, a few hours later, that's still providing opportunities for the future because it still has relevance. Yeah, sometimes you're looking back for your monthly, weekly, you know, daily levels, and they have no relevance anymore. Or maybe they, you know, they do, but they have a lesser relevance. This has obviously triggered something in the market that people are still trading upon, and whatever sent it down was rejected, so it's sending it back up. So you've got basically the opportunity now. This has been a short squeeze, yeah, and the market's been pushing everybody up, and it's going to come all the way back down and continue that down move, or it's going to find a logical point to have a re-trigger. So I would say that it holds above that 50% around here, or where it started again here. If it's another quick down move, with another opportunity to go long. So again, you're not like you wait. You can either sell into it, or you can wait for it to happen, then go back up. But you're not looking for the chart to do this, to do this, to this. You want to get involved in these bigger candles that are set off. So again, buying the market at the 50%, you're in, you're out. Is it going to go again? You're in, you're out. Well, buying it here, it's going down, I'm out. Yeah, I don't want to give all that money that I've made back here. So again, wait for it to start going back up. Again, you know the target, your fibs. So if it starts coming down here and you don't want to sell it, well, don't buy it till it comes back here, then you know it's going to go up to these levels here. But again, you don't have to buy and hold and wait for 2 or 3 hours. You're in, you're out, you're in, you're out. Because markets are always going to give you, you know, this kind of fluid movement of these kind of waves because people are getting in, people are making money, and therefore they're getting out. That, again, it's just how markets function. So that's how you should function. Yeah, you're not leaving your money on the table. You're not just waiting for the markets to say, you know, yes, you're right, yes, you're wrong. Because if you go into the markets with that kind of idea, you're just doing a binary bet, really, aren't you? You know, you're looking to make 50 pips with a 20 pip stop. Well, you know, how many times are you going to make 50 pips, you know, from a 20 pip stop? The markets are moving so quick and so aggressively, it'll probably stop you out 2 or 3 times before it then goes that 50 to that 50 pip target. You know, that 50 pip target, if you know the market's going to go there eventually, why do you need all of that 50 pips from one trade? Why can't you take a series of pips from that one trade? Yeah, it might be the gift that keeps on giving. It might go 49 pips for the next 3 hours, but you're just waiting to go 50 pips to get out to be proven right. Well, that's again, it's not being right at the right time. The right time is when it's going up 10, 15, 20 pips quickly, and you're just taking that money, banking it, and waiting for the next time it's low to buy it going up. And then, the investors of the world will be like, I'm very clever. I bought the low in the FTSE and I sold the high. Well, I was in, 10, 15, 20 times, and I made, much more money by trading bigger size for smaller amounts of profit, but just doing it more often. Now, that's how prop traders work. If you go to any arcade or any prop trading firm like I used to manage in Snyder's, I had 144 guys working for me, and there was nobody sat there, on a trade for more than an hour. People were in the markets, out the markets, and this again comes down to your preparation and how you kind of set yourself up. People love to be martyrs and say, "Oh yeah, I sit in front of the screen to the market open. I'm still there at 10 o'clock at night." Well, you're an idiot. Yeah, only idiots do that because you can't concentrate for that amount of time, and you start seeing too many opportunities. Yeah, what you want to do is stick to the busy periods. Yeah, the first hour over the open, that's busy. Then let the market do what it wants. 12:30 to 1 o'clock, yeah, the run up to the US Open and some US data. Yeah, 4, 5 o'clock, people that have to get out. That's it. Yeah, if any of the big moves happen, then that's when you're going to be looking for, kind of your news sources, your big events, Trump saying something, your tweets. But all this can be set up for alerts. You don't have to be sat in front of your screens 24/7. I don't work more than 2, 3, 4 hours a week. I haven't done for a decade. Yeah, but that's when I'm in it and I'm in the markets. When they're busy, I'm in, I'm out, I'm doing something. I'm making that money. I'm churning the money through the markets. Yeah, and if you miss some opportunities, do you know what? You just miss those opportunities. That's life, I'm afraid. I've missed plenty of big opportunities. I've been sat there when big opportunities have happened. I've been sat through terrorist attacks. I've sat through, the start of quantitative easing. Is it lucky? Don't know. Just life. Sometimes you're there, sometimes you're not. And the big thing is, that was one of the biggest regrets I have is having such a big winning day when something big happened, because I wanted every single day to be like that. So I was never interested in making a grand in a day. Rubbish. Who'd want to make a grand a day? Nonsense. Yeah? Want to be making 20, 30, 40, 50 grand a day. That's the big money. That's what you want. But with big money, you have to have the big moves. And you don't see that. And all you do is get chopped and tailed by the market and end up getting frustrated and then overall losing money. Yeah? I'd be happy at a grand a day these days, if I could do it every single day. But as I say, that's not how I work. I'm involved in the busy periods. I make my money, then I just walk away. But this is the kind of balance you need to find. Yeah, if you want to sit in front of the screens for 10 hours a day, go for it. Knock yourself out. Don't make any difference to me. If you want to find a way of just working, the morning sessions or the evening sessions, well, you can. And if you miss something, don't worry. If you're not in front of the screens or you don't have your phone, again, don't worry. The markets are always going to be there. The markets are always going to be moving. And one of these 8 products every single day will give you the opportunity at least 2 or 3 times a day to make 20 pips. So if you're trading the right kind of size, and again, that could be a mere £20 a point, you're still going to make 300, 400, £500 a day. If you do that consistently, all of a sudden that's 10 grand a month, that's 100 grand a year. It's worth doing. When I read those statements that 2% or whatever it is of retail investor accounts lose money, now you have to understand that this was all brought in because of ESMA. This all brought in because of the European Union, because they wanted to save traders from themselves. Yes, lots of traders lose. Lots and lots and lots. But the reason is, because these stats are so skewed, is this idiots putting 500 quid in, going long gold and being stopped out and losing 500 quid. So it's not like people are going in with millions and losing millions. Yeah, the people I work with that have 50, 100, $250,000, $500,000 accounts, they don't lose. They're just that other side. And yes, they'll have losing periods, but they buy themselves enough time in the market to be able to come back and make back the losses. Whereas the majority of retail accounts that the EU was so worried about were relatively small, below 4 or 5 grand. You could drop 4 or 5 grand in a second in the markets. So that's how the stats are skewed. It's like, oh, well, why would anybody spread bet? It's just a waste of money. Might as well go down to the casino. Well, you can lose 5 grand in the casino in a couple of minutes. Yeah, we've all done that. Well, Maybe not, but I certainly have. But it's a big difference. When you go into a casino, you're playing with money, and you're having a punt. If you're playing in the markets, you lose 5 grand. Sometimes losing 5 grand is just part of trading. But when you've got enough money in the account, you get back on, you make that 5 grand back, and you carry on. If you only got 5 grand in your account and you lose it, it's game over. So this is the whole reason why those stats are so skewed and why people have such a negative, kind of idea about spread betting and trading. Oh, it's just gambling. Everything's gambling. Yeah, everything. Putting your money in, kind of anything has an element of risk. Is there more risk in spread betting? Damn right. Is there more, risk in leverage products? For sure. It's the riskiest of the risk. But this is the whole point. If you're doing something risky, you have to put yourself within the right available parameters of risk. And just trading one product with £500, yeah, with your max leverage and size, is just a binary bet. You're going to make money or you're going to lose it all. So if you have a bigger account, then you have more options. You don't have to trade at the max of your leverage. You don't have to be maxed out. You can trade £50 a point on a 250 grand account, lose 5 grand. It doesn't make any difference. It doesn't dent you. Then you can come back and make it. So this is the problem. A lot of people keep going into spread betting under kind of capitalized, and they're caught out. Now, a lot of people I've worked with over the years, because again, they read things on the internet. It's like, only trade with money that you can afford to lose, right? Well, if you put £1,000 in the account, the majority of people can afford to lose £1,000, yeah? But that's it. What you're doing is setting yourself up to fail. So a lot of people I've worked with have put £5,000 in the account because that's really the minimum you could ever use to try and make some reasonable money. Then I say to them, how many times you put £5,000 in an account? Well, I've done about 4 or 5 times. See, that's the difference, you see. You've put 25 grand in an account, you're then trading with money you don't want to lose. Not money you can afford to lose, money you don't want to lose. It's a different mindset. So having 25 grand gives you 5 goes at a £5,000 account, having that 25 grand balance. And that is a difference. Once you're into that mindset, money you don't want to lose, then trading becomes a little bit easier because you see you're getting somewhere. The one bad trade or the one mistake or whatever. You have to admit that sometimes, you just don't follow the rules and it'll cost you money. But if you can't live to fight through those mistakes, you're never going to move forward. And that's just what the bigger account will give you. So basically, as I've said, what I'm always looking for is these correlations, in the dollar, in the pound. The pound again is working on these Brexit scenarios that, it's so difficult, isn't it? Because everything, you see is pointing that it should go down and make some new lows. But then it's like, what's the alternative to the pound? What is it? The euro it's doomed. It's finished. There'll be contagion. It's falling apart. It's not got control over. It's quantitative easing policies and its interest rate policies. It's clueless. It's a failed experiment. So yeah, the dollar's going to remain king, but where's the world going to put its money? If the UK does get a Brexit deal, it's going to be out there. It's going to be out there making deals with all the world, with Trump, with India, with Australia, and that kind of stuff, and it's got to have some value. So although it's been kind of pushed down on this idea that the empire is dead and if we have a no deal Brexit, it'll be the end of the world. Well, people thought that about world wars, and we thought that about all the bad things that have happened in the world, kind of politically, economically, from all sorts of natural disasters. The world's still here. Yeah, Warren Buffett, people's ability to make money out of nothing. Well, that pound can only go so low before people want to make some money out of it. Yeah, and then it'll go back up. So in the meantime, yeah, I still think there's bags and bags of value. I still think Boris Johnson might not be the man to get the deal, but then he might be. At the end of the day, MPs are going to get over themselves. The EU's going to get over themselves. And it's just go back to basics. If you want a deal, then you have to do a deal. If you don't want a deal, then just keep messing around as you are, and then by default, there will be no deal. So, as I say, really, what you got to do is cycle through the charts and, just keep looking for why markets are moving, but then don't overanalyze it too much. As I say, this whole idea about the stocks is, yeah, you can look at the GDP, it's been decreasing for a long time. The manufacturing figures have been decreasing for a long time. This whole idea that we can keep pumping money into the economy and keeping record deficits, and that, brings growth. isn't going to last forever. House prices, dropped, and then they went back to records. Everything moves in cycles. Things go up, things correct. What we've stopped letting the market do is having a natural correction. So something will give. But this is the whole point about the stocks. Don't keep waiting for that doomsday and that one day where the stocks crash. And it's like, oh, well, I could have just sold that and made a ton of money. Because you'll see that day crashing. And what you'll end up doing is you'll buy it. And then you'll buy it in the short term. It'll overextend and go down, and you'll lose money. The whole point, as I say, is getting in that mindset of being neutral, and it's just about value. Is this market in this 15-minute candle, this hourly, candle, is the value? Can I sell it for 10, 15, 20 pips? Can I buy it for 10, 15, 20 pips? And what technical, constraints can I put around it? Can I put a fib around it? Am I getting near, some good levels of support and resistance? Where is that value in this moment? I'm looking at the markets right now, and can I make some money? If yes, you can. You've got a logical point to aim for, a logical entry point, then trade it. If not, just look at something else. Yeah? Or if you don't see anything moving in the markets and nothing gets you interested, then just don't trade. Save your bullets for another day. Yeah? Impulse trading and over trading is one of the biggest killers of people. You can overtrade in a busy market and still make money. If you overtrade in a quiet market where nothing's happening, you're going to get killed. How many times you've been sat there at 10 o'clock at night and thought, yeah, I've had a good day, I'll just put one more trade on. Then all of a sudden you sat watching the market going, bip, 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 and you're messing around over, 100 quid. And then all of a sudden you think, well, I'll just leave that overnight. You wake up, you're grand offside. This is the thing that kills you. Be busy when the markets are busy. Be generating volume with that volume. And as I say, if you do nothing else but look for a big candle, that's as simple as you can make trading. Big candles happen. What do I do afterwards? Buy or sell, buy or sell. Yeah, you've got a trigger in the market, something that set you off, pinged your attention. You can look at the fundamentals, look at the technicals, look at the correlations in other markets, and decide if you can then make some money in the short term based upon that. If that's a better strategy, then I would say 99% of the people that are out there retail trading, just looking for that one big trigger candle. Everybody else, as I say, people fall into the pit. And, I can't say anything about this because I've taught this stuff for 10 years. But people fall into the kind of this pit of despair about trying to know too much. So you get to know a little bit about trading, then you get it. They know a little bit more, and trading becomes harder because the things you've learned contradict themselves. Yeah, the real art about trading is knowing how you interact with the market, what pushes your button, yeah, what gives you that fear and what gives you that greed, triggering point in your mind. Once you can figure that out and once you can control that, then that is how you conquer the markets. It's nothing to do with knowing more than the next guy. It's nothing to get it, to do with getting your STA, technical analysis, certificate. It's about controlling your emotional intelligence that the market is purposely designed to put pressure on, to make you think you're wrong, to make you doubt yourself, to drag you in, to make you overtrade, to make you think the markets aren't for me. Yeah, the markets must be for somebody else. The amount of times I've worked with people to get them over the imposter syndrome. Now, these are people that have been mega successful in business. All walks of life. And I'm not talking about I've got all sorts of people that I work with, and it doesn't matter if there are I've got surgeons, I've got pilots, I've got people that own huge distribution companies. I've got people that have just started a business. No real experience. I just found something I was good at and just did it, and they made money. The markets aren't looking at you. They don't care what your degree is. They don't care what school you went to. They don't care if you sat there in your underpants. The markets aren't interested. They're doing their function of going up and going down in a way that people think they can always, control or even put things around it so they can understand it. The whole point is the markets are irrational and they will move in irrational ways. And you don't ever want that to change. Yeah, because you're never looking for it just to do one thing. You're looking for the market to do a number of things all at the same time. And your job as a trader is to involve yourself with the product, yeah, and the idea to buy or sell some value and just be in at the right time. So you don't have to be the smartest guy in the world. If anything, some of the best traders I've ever met have kept it incredibly simple. They don't have 10 screens. They don't have, kind of point and figure and Elliott wave and, all these kind of, itchy McCoo clouds on the chart. They're not interested in that. They're just going, is this market moving? Can I understand where it wants to get to and where it could get to before it gets to it wants to get to? And that just means, am I going to be squeezed? Am I going to have to feel pain in this trade, or is the market going to do what I think now, or is it going to do what I think later? It's going to do what I think later. I'm either going to have to do the opposite trade, or I'm going to have to wait. And people hate waiting. So that comes back to my idea of why I only buy the pound low. I only sell the euro high. Yeah, only buy stocks low. Yeah, I'm not looking, for the major crashes. I'm just looking for value and opportunities. And that's how I do it. That's how I stop myself over trading. That's how I stop myself clouding my view. I understand the products I trade. I understand the fundamentals. I understand the massive shift in fundamentals, the big, kind of invisible Trump, kind of cloak and kind of dagger things that he says and what he thinks he can then do with the Fed. And yeah, it's complicated. You've got a lot of things spinning in your mind, a lot of things to make you think you're wrong. But at the end of the day, I come back to the absolute basic principles. I'm just trying to make 10, 15, 20 pips. If I said to you, you just make me 20 pips a day in the market and I'll pay you 100 grand a year, you'd bite my hand off, wouldn't you? You'd be like, yeah, I've done that. I can do 20 pips a day, Steve. That's easy. Mate, that's easy. I can do that for fun, right? All you got to do is make 20 pips a day, but doing £100 a point. There's your 100 grand a year, right? The difference is being in the mindset, being able to do it at the right time with the amount of money, with the amount of size that's going to get you there. You see, because if you want to do it on £20 a point, you got to do more trades. The more trades you do, the more chance you got of being wrong. So it's all that balancing act that's what's going to work with you, your personality, your ability, your goals. Again, a lot of people I work with never set goals. Just want to make some money from trading. What kind of money? You make a quid, you can toss a coin, heads or tails, buy and sell, and you can make a quid in the markets. You can make 1,000 quid in the markets doing that, but probably only a couple of times before you lose more than you make. Again, it's about treating trading as an investment in yourself, an investment not just of money, but of time and in yourself. And as I say, don't be fooled that you have to read every book out there. Don't be fooled into, this idea that, it's something that, is overly difficult. It's not. Trading isn't difficult. It's the easiest thing in the world because it's just a click of a mouse. Yeah, everything becomes hard after that. But it's all about the mental strength, the mental discipline you have to have, understanding yourself, being honest with yourself. That's why the mentoring has really helped, the kind of higher end clients or people of any ability I've worked with, because I tell them the truth. I say, you've been a dickhead there. You've been stupid. You've done something was wrong and you've held on to it for no reason. And it's like, yeah, I have actually. Yeah, why did I do that? People just do that. People listen to me for months and months and months and then stop listening. Then they lose money and they come back. Yeah, stop listening. So that didn't work, the stuff I tried. Well, that's fine. You've learned. We'll come back. We'll work through it and we'll carry on. At the end of the day, the markets are spitting out more money than they've ever, done in the past. But it is becoming more difficult because you have to time the opportunities and you have to make the money while it's there. Because if you're chasing the money, or as I say, you're just kind of, waiting for these lows and highs scenarios, the amount of money you leave on the table, the amount of stress you have to go through as the markets ebb and flows, just takes any kind of fun out of it. And it certainly takes your edge out of it. So this is it. This is how I'm going to try and bring the markets a little bit more to life. Again, keep reiterating, the kind of idea that you have to have a base and look at the kind of your basic screens and your correlations, kind of what goes up should make other markets go down. What I'm then going to go through in the next webinars is, having the right kind of setups, and there's multiple time frame. So some of the things like the DAX, for instance, having this idea of, what it's done in a day. So what it could potentially then do in the hour, the 15-minute, and the 5-minute. And how you can break every single product down to these 4 charts. And that's all you'll ever need to trade one product is 4 charts and these time frames. And how trading will be a lot more simple. I'm going to then go through things like Bitcoin, because there is money still to remain in Bitcoin. Obviously, the minute selling it. But, because it's now got some data in it, my charts now has the ability to accurately plot it, because before there was no volume. So, yep, see the market get to the 50%. Yeah, think about it, and it goes down. Look at the fibs. Perfect. Every time. So there are new opportunities now. We've got enough data in things like Bitcoin. I'm going to go through some other things. I'm going to go through interest rates and the expectation of interest rates. So things like the New Zealand dollar, all the reasons why it's gone down. I'll go through that. I'll go through the global interest rates and where they're going to go. And again, the pound doesn't necessarily have to go up against the dollar. It's not the only fruit. The pound against New Zealand dollar, as I've told you, I've been buying for months and months and months, and this has been that a longer term strategy based upon that scalping. So instead of getting in and getting out, I've been buying and buying more and more and more and shit tons because it's going to go up. But that's a different style of trading. But then again, I can go through that as well and tell you my thoughts on interest rates all over the world and how you use that, for your FX pairs. So again, just going a little bit deeper into things than I have done before. And best thing is, send your questions through. If you've got any questions you want answering now, use me. Ask me things. Before I wasn't asked, if I'm being honest, because you're asking me a question about Fibonacci, read the book, or, you should have watched the webinar. Ask me questions on the market. Ask me, why you failed. Ask me anything. Yeah, there's nothing you can't ask me that I haven't been asked before, or I can't, give you my honest answer. I mean, this is the way it's kind of going to go for the next kind of, the next few webinars. I'll keep reiterating that it's all about mental strength and being prepared, having your technical analysis on your charts before you chart, understanding where the markets can go before they go where they got to go. Again, having the kind of idea that, if you want to make money, you can scale up, you can trade bigger size, and that whole idea that money makes money has never been truer in trading. What's the minimum you need for your mentor, me, Steve? Well, I mean, to be honest, whatever. Let's just talk. Let's see what you're trying to achieve. Let's see what your goals are, and let's see what we can do. At the end of the day, I've kind of set the higher end for the mentoring at 25 grand for a deposit because, with ESMA, you're down to 30 to 1 leverage. So if you want to trade the DAX, you're only at 30 to 1. But as I say, there are ways around this. There are offshore accounts. There are ways of getting that leverage back up. So the best thing is, just talking to me about your options, what you want to achieve, and then we'll take it case by case because it's different for everybody. I'm not saying that, there's a finite minimum of 5 grand. That generally, is the minimum that, you're going to have a fighting chance at trading. But it's different for different people. People will inevitably want to start on 5 grand and then trade £2 a point and say, well, if we do it on £2 a point, I can go to £20 a point, can't I, Steve? Again, some people can, some people can't. I have to take these things on an individual basis because what is clearly apparent to me over the last 20 years of trading and over the last kind of decade of mentoring people is that everyone's different. So I can get to the root of what you're trying to achieve very, very quickly because I've just done it and I've just spoke to so many traders. So we have to take it case by case. So just send me an email, Robert, or just get me on my site on my live chat. There's a million ways to get hold of me. You'll have an email after this webinar with my email on it. So yeah, I'm impossible not to find online. Any other questions? Any other thoughts? As I say, I'm not just going to kind of bang on about the old ways of, looking at technical analysis. And, a lot of the kind of myths and stuff I'm going to throw out the window. And I think Elliott wave for short-term trading is useless. So again, you could do an Elliott wave on an hourly chart, but you use the different waves to be involved in that one individual wave. So I'll show you examples of that. Again, the total traders, things like that, and things that I've spoke about a million times. They had a plan. They had their own mentors. The total traders were the mentors. So why did they all become millionaires? Because they had somebody in their corner that didn't just back them with a ton of money, gave them the confidence and the IP, to trade in the markets and get out when things are wrong and to keep making money when things are right. So again, yourself, if you ever tried trading, you can't speak to anybody else about trading because they don't understand it. That's why traders only speak to other traders. What's good for syphilis? Probably not sticking your dick in some dirty bird, mate. What's the minimum? We've had that one. Anything else? I mean, as I say, guys, I'll keep doing these webinars as long as people are interested. At the end of the day, I'm trying to teach you here how to make money, how to get the right mental space, and what kind of tools you need. At the end of the day, I'm not here to babysit you. I'm not here anymore to tell you, kind of generic information about about technical analysis, because it's been done. I have thousands of webinars. There are hundreds and hundreds of recordings. You can find them out. These are now meant to be more live sessions where you can ask me questions in real time, trying to figure out why the world's the way it is, where the markets are trying to kind of get to the points they want to be at, and more importantly, that none of that matters. It's all about making money, being right at the right time. That's the ultimate key to making money in trading. Being right at the right time, and how you get there mentally, how you get there with your technical setup is something that can be worked on, and it has to be personal to you. As I say, having something like this, a setup like iView charts where everything's done for you, is obviously a bonus because it's tried and tested. I have hundreds of people all over the world using it, and this is what I do to make my money. I use it. So if anybody wants iView charts, again, contact me and we can go through that. As I say, get on Amazon, buy the book. Anyone that buys the book, you can have a free one-to-one mentoring session with me. Again, book's been out 4 years pretty much to the day. And, again, I haven't really pushed selling it. If people want to like what I say and they go out and they read it, you're going to have a better idea of getting inside my head. So when we talk, we're on a much better plane. We're getting on the same kind of level a lot quicker. As I say, guys, I mean, what can I do? I'm here. I'm doing it. I'm doing it for free. What more can I do for you? Would you be doing a webinar about risk management? Well, I mean, risk management will be part of it. Risk management, again, I'll be understanding that if you're trying to make 20 pips, you can't, go 100 pips offside. But I think it's more about active risk management and using scale, being able to positively and negatively average to hold short-term positions for when you feel the pain. Because the risk management about, as I said to you, trying to make 50 pips with a 20 pip stop, it's dead. It doesn't work anymore. It just doesn't work. Sorry, I mean, the questions are just going in the wrong way, I think. Okay, so just in the process of selling my house, we'll get in touch. Okay, yeah, bought your book. Still have one session with you. Yeah, absolutely. I mean, just open the dialogue, guys. The webinar's here. The webinar's here for you to kind of ask me questions and to kind of just listen to what's being said and just kind of sit back and think, yeah, I like what this guy's saying, or I don't. Where the real magic happens is afterwards. So get me on Skype, Steve Ruffley. Email address, steve@steveruffley.com. Get me on Facebook, LinkedIn. Just Google Steve Ruffley and you can speak to me. I am open for business. I will speak to anybody that's interested in making money trading. That's what I'm trying to do now. I'm trying to get anybody who's interested. All right, guys. Well, listen, we've had an hour now. Again, I'm not in the habit of just talking for talking's sake. I'm trying to mix things up. I'm trying to make them interesting. I'm trying to, build a new community of people that are interested in trading or want to learn more. And as I say, the ultimate aim here is to get you trading live money of a decent size so you can make some real money, because that is what trading is. I'm not going to start saying that you can't make money off $5 grand anymore. You can do whatever you want to do. Yeah, and I will tell you the utmost honest truth about your chances of success, right? But from now on, it just comes back down to anybody who's interested in trading that wants to speak to me. You've got to reach out to me. We'll go through it on a case-by-case basis, and we'll try and get people to where they need to be. I can't say further than that. All right, guys. Well, I'll be here the same time next week. Same time, same back channel. Get any questions ready. Go off and buy the book and read it. Come back with some questions. Or as I say, get me as soon as you want on any of the mediums I have just told you. All right, guys. Take it easy. I will see you all in a week.